Be ready, 5 seconds. Today in the discussion related to the Finance Bill 2021, 25 honorable members have participated and have spoken. Many of them have spoken elaborately on the Finance Bill itself, while many others have spoken on matters related but rather on the budget. But it is because many of the issues that have been raised are fairly important and they have repercussions in the sense of information that is in the minds of the honorable MPs, which can of course later be communicated to the society at large, even if they referred to the budget rather than the finance bill. I will certainly try to give the explanations. I would like to highlight a few points, although many of the members have actually gone through the details and spoken very elaborately. I am very grateful that they spoke so elaborately on it. But one or two features of the finance bill I would like to highlight. There is no change in the rate of income tax. That is one thing which I would like to say with a certain sense of responsibility, because this is a point on which, even as the budget was being prepared, the Prime Minister was clear that to meet the contingency which has arisen out of the corona, we are not going to generate resources by raising tax. So, very clearly, references to income tax have to be in that context. However, there are certain changes being made in the income tax which are largely focused on the issue of ease of doing business and compliance, which will have to be brought down. In the public domain, you have a lot of thinkers, think tank, and also observers of Indian economy who are repeatedly saying that the compliance burden on business is really big, some even quoting it in thousands, which may not be very close to the facts. But having gone through the reports and also having spent some time on the ways in which we can simplify compliances, changes in this finance bill, particularly referring to the Income Tax Act, pertain to ease of doing business. There are some great changes in the Customs Act which are also being shown here. Again, in the Customs Tariff Act, the Central Excise Act, and many others, ease of doing business is also kept in mind when we are trying to rationalize the tax. In fact, during my budget speech, I had mentioned that from 1st of April till end of August, we will be looking at rationalizing the existing Customs Act and duties which have been levied over the decades, which are all lying there without finding a closure date, will all be put for public discussions. We shall continue with the exercise of rationalizing and simplifying Customs Act. So, even in this finance bill, we are beginning with that exercise. Eventually, we hope to have a complete structure for the Customs Act which is going to be absolutely simple. There has been a lot of discussion on the Agriculture Infrastructure Development Cess. In the larger context of cesses per se, cess and surcharges being charges levied by the central government which do not get devolved, certain concerns have been repeatedly raised by very many members. I will address them particularly in the context of the agriculture infrastructure development cess, which is very important in the context of wanting to create more infrastructure for agriculture, particularly in the context of APMCs and marketing yards. It is a complete affair of the state governments. Therefore, even as a beginning, I would like to tell you something which I said during the budget speech, and I shall repeat it even now, that AIDC cess will have to go to the states because it is for improving the infrastructure of the APMC. It is for the farm yards to have better infrastructure. So, the cess may be a cess which never gets devolved, but it is a cess which eventually is for the purpose of improving infrastructure for agriculture. Agriculture, farmyards, and marketing yards being with the state government, the cess will have to go to states only. That is one opening remark in regards to the AIDC cess. In the finance bill, there are a few new proposals which have been added, which are of a minor nature. One thing which I want to highlight is the new proposal which is coming as tax exemption being made for the National Bank for financing infrastructure and development. This is a very important step that we are taking. All of you are aware, Madam Chairperson, that we had announced an infrastructure pipeline. That pipeline has already identified greenfield and brownfield projects, 7,000 of them, and rapidly with the help of the state governments, we need to have them built, some with private participation also. For all of that, we need resources to be raised. Scheduled commercial banks should not be getting into long-term infrastructure funding because that is not the core business for a bank. Banks should be lending short-term and earning money out of it. The kind of risks that infrastructure investment require cannot be faced by the scheduled commercial banks. Therefore, there is a need felt to have a development finance institution. This bill is already introduced in this August House. For that, we need to give some tax exemptions, and that is also being brought in here. The honorable members have actually covered extensive areas while asking questions. Therefore, instead of me elaborating on the very many points, I think I will be able to cover majority of the issues which have been raised about the finance bill in the form of answering the honorable members who have raised the questions. I would like to make a statement. It is paid with a fairly objective heart. It was very much a pleasing experience to have an honorable member from the opposition benches recognizing some of the good work done by this government. I honestly do want to praise and put that on record.